Anyway, economists are raising their inflation forecast and lowering their consumer discretionary spending outlook because of that surge we've seen in energy prices. They may be down a little bit this morning, but WTI back at 76.31. Pulling back now, but this comes after a huge spike. Yesterday, we saw highest levels that we've seen in 7 years, not only for WTI, but also for natural gas. Steve Leisman joins us with more on this. And Steve, this is kind of the convergence of many of your areas of expertise. You're not only an economist or an economics reporter, you've also covered the energy sector in the past, too.
Yeah, both in Russia and the United States. And it's really interesting what's happened, Becky. The latest surge in energy, it's going to hurt low-income Americans, and it's going to sap money away from other discretionary spending, and it's going to drive inflation higher at a time when inflation already is a problem worth watching. But because the U.S. produces so much energy, it's going to hit the economy in a very different way from previous price spikes. In what would be an historic change, Nancy Lazar from Cornerstone Macro writes, soaring energy prices are no longer blanket bad news for the U.S. economy. In fact, GDP and oil prices now have a tiny positive correlation. I never thought I'd say that. U.S. oil production off its highs of 13 million barrels a day, and that's part of the reason for the higher prices, but it's still 11.5 million and up in the last week. As prices rise, domestic producers increase production and capital spending. All that boosts U.S. economic growth and offsets some of the negatives of a price rise on consumption. In fact, a 10% increase in oil prices used to subtract 25 basis points from GDP. Now it's a wash. In addition, consumers just spend less on energy. Take a look at this data. Americans now spend about 3% of their disposable income on energy. I know they think it's 90%, but it used to be 8.5% in the mid-'70s and nearly 5% for most of this century. That doesn't mean the price spike won't hurt. It's like a regressive tax that hurts the poor most. Michael England from Action Economics says this isn't good news for households. It'll hurt spending on other goods. It affects Christmas sales and department store sales at the margin. The difference now, more of that extra money they spend stays in the economy. Understanding the changed economics of energy, simple. We now have an energy economy the size of Saudi Arabia inside the U.S., Becky.
Steve, is this going to be any different, though? The only thing that I would raise a question about is, will you see the major oil companies start trying to produce more energy based on this? They've cut a lot of their CapEx in terms of what they'll be doing for exploration and for building these new things. And they've done it because they've been pressured by their shareholders who don't want them to just be carbon producing companies. They want them to be looking at all these other all these other things. So it doesn't feel like this is going to be the spigot turning on back as quickly as we've seen in the past.
I don't think it's going to turn on as quickly, and it's not going to turn on as much. I think all of that is right. Rig counts are up quite a bit, according to my colleague Brian Sullivan. So that's one sign that it is going to come back, at least somewhat. I think you're right. I think there's pressure on energy companies not to come back as much. But I don't know. Becky, you've met these wildcatters like I have. You think they can help themselves from drilling when the price is $70, $80 a barrel? I don't think they can, and I don't think they will.